Hello, everyone. Good afternoon. I see all of small-scale farmers here assembled, so I'll make this talk very interesting, informative for you. So how many of you are small-scale farmers, particularly when you are growing some vegetables? Vegetables, okay. Anybody have any cattle, cows? Okay, anybody has tractors? Okay. Anybody has some barn, some farm properties? Okay. So for those people who raise their hands, this talk is going to be very, very interesting and informative. So this is about securing farmers' future. Okay. This is about insuring ourselves. So how many of you know about medical insurance? How many of you have medical insurance? Most of you? Okay, medical insurance. How does medical insurance work? You pay a premium, annual premium, and if you get sick, you go to a doctor, right? And they cover everything except you have to pay a copay. Say, for example, $15 or $30 or $50, whatever thing it is, they cover the entire procedure. Okay, if there is a surgery or if there is some medical treatment you have to do, so they cover everything. Okay, that's what medical insurance. How many of you have home? Your home. You have your home as well. So you take home insurance, right? So how does the home insurance work? So if there is a damage, like a hail damage or a wind damage or a roof damage or property damage, you try to claim the insurance and get the money back. That way you can cover the loss. Okay? So in a similar way, we also know about cars, right? All of you, most of you drive cars. You have car insurance. Same way, if you have an accident, you can get your money back from the insurance company, right? Not only for the car, but also if you have any kind of a medical injury, the insurance company cover them. So today we're going to learn about farm insurance, okay? There are two aspects of this. One is the property, the land itself. The second one is the people who are using the land and the animals and the equipments in the land. There are two different things, okay? So what are the natural calamities you can think of? We can see a lot of rain, lot of too much of flood, right? And damages we can see recently there was a Hurricane Harvey came in, there's a lot of flood in the land. So during too much of flood, you lose entire crop, right? So all the hard work you put in the field is gone. So in order to avoid that, you have to better to protect your property with insurance, okay? In this case, we are talking about farm insurance. So today we're going to cover 5 different topics. So we are going to talk about agriculture insurance products and coverage options, what is going to be the cost, what are the companies in the space, and also we are trying to understand about the recent innovations and also the farm bill. The government is giving a lot of subsidy, and we are going to study about that. And what are the key benefits associated with insurance, farm insurance? What are the benefits the farmers have? And also, what will have an impact on the farmers, okay? Many farmers go bankrupt because they lose crop, they lose the income, they cannot pay their loan back. So they use the entire financial freedom, okay? If you lose your financial freedom, then you cannot do any more agriculture or something you can survive. So you need to make sure to protect whatever thing your hard work and your farm and your property, it has to be protected. And also we're going to study interesting aspect about different case studies. If you are a small scale farmer like a 1 acre microgreen farmer or a 1 acre organic farmer, if you're a cotton farmer, or if you're a beef cattle farmer, what are the benefits you're going to see? So here are some of the table of content. We'll be walking through challenges, global market size, type of insurances, agriculture insurances. We're going to see the impact and also we're going to see the case studies. So let us see the challenges, and basically we need to understand why we need insurance. Okay, we need to understand the importance of insurance. So what happens if you don't have insurance? Okay, assuming you have a 1 acre land. Okay, you bought, say, $10,000 loan from a government or a bank, and you bought seeds, fertilizers, and you plowed the field, you sow all the seeds, and the crops are coming great, and suddenly there is a storm, and there is full of flood in your land. All the investment you made in your land goes away. So what happens if you don't have insurance? You lose everything. Nobody is going to pay you back. On the other hand, if you have an insurance, you can get 90% of that money back. For example, if you invested $10,000, you can get close to like $9,000 back. That's how the benefit of the insurance is. And the amount of premium you're going to pay is very, very less. Maybe somewhere like $10, $15, $20, $50. Okay? So it's always important to protect. You have to foresee some kind of big disaster, whatever big flood or hurricane or wind, whatever thing happens that will damage your crops. So better to protect your investment by doing an insurance. So we're going to study about that. So because if you don't have insurance, these are the problems you'll have. You'll lose your money, you'll lose your credit history, you cannot borrow any more money. And that's the reason we need to avoid the risk. Like same like your health, same like your car, same like your house, you need to protect your land and also your investment you made on the land, including your tractor, your cows or animals in the farm, all the other investments you make, everything has to be protected. So let us see the global market size. There are several different sectors. So we're talking about agriculture insurance. It's almost like in 2026, it's a $41 billion industry. So many, this is a global industry. Okay, there are many companies, like for example, can you name some companies, insurance companies you know? Car insurance company? Progressive, State Farm, AAA. Okay, these are all companies. Like that, they also have companies for farm insurance. Okay, so these are all corporations who try to protect, give an insurance for your property and whatever. There are different things we're going to study about this. So how does this work? You have to this is very, very important. I keep stressing again. Whatever the insurance value is, very important. You need to figure out, for example, if you're insuring a house, say for example, my house is worth say $100,000. So that is the insured amount you're going to insure with a company. So for example, if something happens, my house burns out, okay? And you go and claim and get your $100,000 back. That is the advantage of the insurance company. What happens, there is a damage in the roof, or there is a flood damage or a roof damage. Then you can get $10,000 or $20,000 from the insurance company, they'll fix the roof, okay? So these are all the benefits we have seen with our own experience. Insurance is very important for our own survival, and if for some reason, if you don't have insurance, you cannot build your house back. Then you lose things. Then you have to go borrow again. Then you get into debt. Okay, so having an insurance is always beneficial, and this is specifically about agricultural insurance. Okay, we're going to study about some of those things. So there are different types of agricultural insurance. We're going to study about multi-peril crop insurance. Basically, there will be several kind of incidents. It can be flood, wind, or any kind of pest. There are so many different damages you can get, crop can get. So these are all called multiple. It covers an entire thing. It's called multi-peril. And you can also name a particular stuff, only flood, only rain, only infestation. We can also name our stuff. And also, we can also list them separately, categorize them. You can also have cattle insurance. If you have cows, you can insure the cow. If a cow dies, you can get the money back. Okay, so when I talk about the premium for a 1 acre land, the premium is somewhere not more than $50 a year. That means 90% of the money the government is also subsidizing. That means 90% of the money coming from the USDA. You are just only paying 10%. So why not you make use of that 10%? You are protecting your investment in a long way. So typically, the insurance happens in like a taxable year. So the taxable year is always from January to December, right? So your insurance, you have to file the taxes in April, but the taxable year is January to December. So insurance also, in a calendar year, every year it happens. So it starts in January and finishes in December. If anything happens during this period, you are eligible to claim, okay? So if we're talking about the insurance, these are the different coverages. We can have crop coverage, livestock coverage, machinery coverage. So in the farmland, you'll have tractors, you'll have some kind of plowing machines, you'll have some sprayers, you'll have some tools, so many other equipments in the farmland. You'll have a barn. We can protect all of these things in a blanket protection, or individually we can also protect them. So these are some of the agriculture insurance available in the market. We can think about cattle insurance. You can also see the global market of the cattle insurance, and also what are the eligibility criteria, and what are the top insurance companies you can think of. So in the case of cattle, mostly it is horse, cow, donkey, whatever thing you have in your farm, okay, you can insure that animal. And there are two different types of coverage. One is the death of the cattle. If the cattle dies, then you can get your money back. Or the other thing is disability of the cattle. Sometimes the cattle break the leg or cannot walk, or sometimes it get infection and then it still lives, but it cannot survive, it cannot do the regular activities. We can also get coverage for that. There are two different kind of coverages. So things covered in the cattle are death of the cattle, diseases, infection, injuries to farm accidents. For example, if the cattle is plowing your field or doing some operations, it is hit by some other unexpected accident. Also permanent disabilities. So these are all the companies. You can see the global market size is almost like $5.4 billion industry. There are several companies. This is growing. That means awareness is slowly picking up. There are people trying to understand what are the awareness, what are the importance of this. And we can see the growth rate is also increasing at 7%. And because of the, why recently we need to have more insurance? Because of climate change. So we see too much of rain or no rain, too much of flood or no water at all, okay? This kind of climate pattern is impacting the farmers. We always are dependent on rain god and the sun god for giving all our energy, free energy, but unfortunately because of the climate change, everything is not happening according to the plan. So you always assume that this year we're going to have a good season, good rain. Unfortunately, there is no rain, then the whole crop get lost. So we can cover for your losses by insuring your property. So let us walk through this cattle insurance policy. So we have to identify a cattle. We can name a breed of the cattle. We can also define the price of the cattle, how much you are insuring a cattle. Same like what you're insuring an individual. Like if I'm insuring myself, what is the cost? Same way we can insure a cattle. If it dies, what is going to be the cost? And we can also choose a premium. We can say that I don't want 100%. I may need, because higher the premium, higher the price you get back. Lower the premium, lower the price you get back. Say, for example, if it's $10,000, you have to pay $100 premium, just per year, okay? You'll get $9,000 back. If you're paying, for example, $70, then you'll get only $7,000 back. If you're paying $50 per year, you'll be getting only $5,000 back. So depending upon how much money you pay, the coverage will change, okay? So you have to also document this information. You need to, when you take an insurance for a cattle, you need to put the tag, you need to document, okay, this is the cattle, living cattle, on this day you took the insurance, and something happens to the cattle, you have to take a picture of the cattle with the tag and show as a proof to the insurance company. Okay, then only you cannot say that my cattle died, I just buried it, I don't have any proof. Then they are not going to pay you money back. So you have to have a proof. Okay, so you need to take pictures. And also, not only pictures, you have to go to your insurance agent, call him, and prepare the paperwork. Okay, you need to tell what was the incident, why it happened, how it happened, why the cattle died. Then you submit the claim, then they will send you a check. That's how the insurance stuff works. It's very important to document the information. If you don't document information, you don't get your money back. So you need to have a basic knowledge about how much I insured and at what condition the animal died, and when should I finish the paperwork, what are the evidence I have, then you get your money back. Okay, so there are several factors you need to keep in mind. It can be cows, bullocks, buffaloes. It can be male or female. You can insure any cows, okay? And we call them as herds, like how many head counts, like depending upon, for example, you have 10 cows, we can say 10 heads. If you have 20 cows, we can say 20 heads. And each individual cows can be separately insured, or it can have a blanket insurance for entire set of cows. So in this case, for example, I've given you animal types like milch cows or milch buffaloes, stud bulls. There are different categories. And this is the age, how long the animal can live. Okay, how long you can insure the animal. For example, the case of milch cows, it is between 2 years and 10 years, we can insure the cow. So that means every year you have to pay the premium. Something happens during this period, you can get your money back. Okay, depending upon the cow and the number of years, the premium is going to change. So these are all some of the companies. Very important to know what company, how trustworthy the company is, whether you get your money back. That's very, very important. So some of the companies established all the way in 1926, and some of them in recently as early as 1984. So there are several companies in the space. You have to do some research, which are the companies in the market, what is their paying capacity, what is their market size, and based on that, you can choose the insurance company. So let us go into the crop insurance, okay? This is something about the crops, okay? You have the land, assuming you have 1 acre of land or half an acre of land or 10 acres of land, doesn't matter. And the insurance is covered based on the square foot of the land, how much land you cover, what are the crops you grow, whether it is a regular crop or it is organic crop. Organic crop, you get much more, like 1 times to 2 times more than a regular crop. Okay, if you're a regular crop, you get only 1 time. Organic crop, you can get as high as 2 times more money. Okay, but you need to have a certification for organic crop. So we can see about the market and the different conditions, and also what is a federal program. So particularly USDA, as I told you earlier, 90% of your insurance money is paid by USDA. You're only paying 10%. That means it is highly subsidized. Okay, you're only paying 10% of the insurance cost. So you're paying nothing compared to government is taking the blunt of the risk with you. Okay. So when you talk about the crop insurance, so it gives a compensation for coverage of plant-related diseases. Say, for example, you have half an acre of lettuce grown in the field, and suddenly it gets infested. Entire crop goes away. Okay, you can get all the money back. For example, if 25% of the crop is gone, you can get only 25% money back. Depending upon how much you lose, you get the money back. Okay, so that's how the actual crop protection insurance plan work. Also, multi-peril instructions about natural disaster. This is about rain, wind, too much cold, freezing, sudden freezing. All these factors will lose crop. Under those conditions, we have multi-peril crop insurance. And also, this is a very interesting aspect, crop revenue coverage, okay? For example, you are growing corn, okay? In the case of corn, you have a fixed amount of corn produced in an annual year, 1 year, okay? Say, for example, 1,000 bushels. But you got only 700 bushels. That means the yield, the crop amount, the grain you got is much lower. Then you can demand some insurance that you lost your crop because of so many factors, then you can get the difference. The insurance company will send you a check for the difference. Okay, that's the advantage of this revenue coverage. So these are all some of the companies you can see. This is growing again with 5% annual growth. And again, the reason many people are opting for insurance is weather-related problems, because in the last 8 years I have been in Houston, Texas, I saw like 4 major storms, okay? And 4 devastating storms. There are so many. Also, we saw one big frost condition, like too much cold, many people died. So there are extreme weather events are happening because we are closer to the coastal area. So there is more chances of flooding and flood-related damages. So that's the reason many farmers are opting for this kind of insurance. So for the multi-peril insurance company, these are the many companies we can see. And the biggest player here is Chubb Insurance Company in US. So look at the stages covered under the crop, okay? So you have to take, as I told you earlier, you have to take a lot of evidence, pictures, okay? You have your land and you plow the field and you take a picture, you sow the seeds, take a picture, you bought a fertilizer, you take a picture, you sow that in the field, take a picture. All the pictorial evidence is very, very important. That means you did the work. You're not going to claim like you're sitting at home doing nothing and then say, oh, I lost my crop. Nobody's going to believe you. So you need to have all this evidence. And in this case, for example, we need to look at local calamities. For example, your land alone will not get affected. You'll be seeing your entire neighborhood getting affected. So local calamities, you have to look at the news and look for local events, local risk. And also you need to look for losses due to non-preventable diseases, sometimes wildfire. Recently we saw a lot of wildfire or forest fire, and many people lost their cattle because of the forest fire. And also, if you cannot harvest a crop, for example, when during the harvest there is too much of rain, then you cannot harvest a crop. Then all your crop is damaged. Then you can get the money back too. So at different stages, anything can happen. So better not to take any risk. Insure your property, and that way you can get everything covered. You can think about risk of planting, also post-harvesting crops, all the stages, different stages of the cropping, there could be many risk. So in a way, when you are insuring a crop, have a crop protection plan, that means you are avoiding risk and you are getting some help from the government and insurance companies. So these are the factors for crop insurance selection. So for example, the need for risk, okay? So typically this is what happens. You decide, okay, I have a piece of land, I want to insure them. So first thing you have to do is call the insurance company, okay? Have a conversation, okay? This is what the land, this is the location, I've been doing this farming for so many years, I have the certification, I want to buy the insurance. The insurance agent will come to your house and then look at your land, inspect your land, and say, okay, we can discuss about this. Then you get in an agreement. And same like your house, right? If you want to buy insurance for your house, you're going to call the company. Many times the company does not come to your house. They know, they took the aerial view of the house, and then they know the interior design and architecture. Based on that, they can tell you what is going to be the worth of your house, and they can insure a house. But in the case of farmland, they'll specifically come and inspect your farm to make sure the dimensions and all the barn and other equipments you have or animals in your farm, everything is properly documented. And also, we have to correlate with the area production. So on that area, they have a statistics, how much corn is produced in a given year, in a given land. So they have the insurance company has got these numbers, okay? So if you say that I lost my crop, they're not going to believe you. You have to show evidence. Then only when you give evidence, they will be able to pay you money back. And also, you have to structure this. You have to document all this information one by one in your notebook, and that way you can communicate with your insurance company. And also, sometimes the government gives you a loan forgiveness. Sometimes you take a loan from the government because of the flood damage and other things. Government say, okay, the loan is waived off. You have to look for those news, okay? So that way you can apply, do the paperwork. That way you can get away of the loans which you borrowed from the bank. So here are some of the historical cost factors. You can see this. You can see the fluctuation going up and down, but after 2018, we can see a steady raise. These are the program delivery costs and also other direct costs. The other direct cost is more higher than the program delivery costs. So we can see the trend, and also we can see that the historically the amount of investment going in this area is higher, getting higher and higher. So these are the top insurance companies, policies you can think about. There are agricultural insurance companies, Chubb Insurance, American Finance Group, and also Fairfax Financial Groups. These are all different groups. You can choose any one of those companies, ask for more details. So let us go into the next topic area. This is machineries, okay? So if you have tractors, any kind of plowing machines, any kind of sprayers, any kind of expensive machines in your farmland, then you can insure that equipments. So we can think about, these are the equipments, field equipments, sometimes farm office equipments, planters, sprayers, hay racks, and also there are other additional things we can think of. So each of these can, for example, we can itemize each one of them. For example, my tractor cost $10,000. My plower cost $3,000. And my sprayer cost $1,000. We can itemize them, and then you can take an insurance, or you can also take a blanket insurance. Entire farm, whatever in the farm, you can do a blanket insurance. This is called as the individual insurance, or we can also do a blanket insurance. Blanket insurance does not itemize things. It will have a broader coverage of the entire thing in your farm. And it is always better to have individual insurance. That way you can get more coverage. Okay, the specific amount, specific brand. For example, if you are buying a very expensive tractor, which just costs more, better to tell what that brand is, have a copy of a receipt, how much you purchased for. That way you can insure the right amount. So if something happens to your tractor, you can get the exact money back. Okay, if you have a blanket insurance, they will have a general price for the tractor. It don't be a very specific price. So here are some of the additional coverages we can think about. Sometimes there are some legal liabilities we can also cover. We can also cover various parts of the tractor. Some mud got broken up, or some damage happens to the gear, or the tire got stuck and broken, or punctured and busted. So some of those individual parts we can get cover. And also we can cover to accidental occurrence. For example, if a driver is driving a tractor and suddenly the tractor tips and the driver falls down, he has an injury. He can claim insurance for his own injuries because of the tractor. Okay, there's also scope of coverages, and also they will also have a depreciation. For example, you bought a tractor this year 2026, but you had an accident after 2 or 3 years. They are not going to give all the money back. Every year, the tractor will have depreciation, okay, 10% depreciation. For example, you buy $10,000 tractor today, after 1 year, it's going to worth $9,000. Okay? After 2 years, it's going to worth $8,000. After 3 years, $7,000. It's going to depreciate. So in the third year, assuming you had an accident with the tractor, you're claiming insurance. How much money you will get? Any idea? $7,000. You get $7,000 back because you have to calculate the depreciation over a period of time. So these are all some of these companies again. You can see, again, different players, different companies. You need to understand what insurance companies they are, when they are in the market, how long they are in the market, what is their track record. That way you can choose the companies. So next let us go into aquaculture. Okay, if you have a pond, if you're growing some fish, we can also protect your fish activities using these insurance companies. Okay, so you need to understand what are the top insurance company in this space. So in this case, fish is very, very notorious with diseases. Okay, many times in the water that could be diseases, and many fish dies. We can cover the disease risk. We can also cover somebody Overnight, people come and jump in the fence and steal your fish. And that way you can also, theft is a big problem with the fish, and also chicken and goat. This is a common problem. Even if you fence, people will jump the fence in the night and then steal your stuff. Okay, so you have to be very, very careful with that. Extreme weather events, again, too much of rain, too much of sun, too much of flood, or hurricane damages, we can also cover that. Pollution, for example, this is the funniest thing. If you're having a pond, say 10-acre pond, if you're growing fish very well, somebody in your neighbor put a fertilizer in his farm using a helicopter or an aeroplane. That fertilizer come to your pond and affects your fish, you can claim damage. Okay, so it's not like, oh, this is not my fault because somebody else's fault. You cannot go and fight with your neighbor, but you can charge the insurance company. The insurance company will file a complaint against the our neighbor. Okay, that's how they work. We don't want to fight with each other. We need to get your money back. And also predators, right? For example, many times in the goat or chicken, I had my own farm, a lot of snakes. They eat the chicken. And I had a rabbit also in my farm. They used to pull down the rabbit and eat the rabbits. So we lose a lot of rabbits over a period of time. So depending upon how much we lose, we can get the money back. Okay, so you have to be very careful about all the investment we have. And sometimes malfunction of equipment. Sometimes the equipment motor lost, motor does not start. You have to get a new motor, new part. Same like your car, right? For example, if you insure a car, it is covered, and if something breaks, a motor has to be changed, you can go to the company and they'll change the motor. They'll say, okay, you're covered, you need not pay any penny, right? So that kind of stuff. So these are some of the benefits. Again, diseases, unexpected loss, operational stability. So again, you have a yield loss. Every year we get so much tons, and suddenly you lose the amount of you're supposed to get, you can get the money back. So these are the key considerations for aquatic industries. Most important thing is a comprehensive coverage or a specific aquatic operation. So it can be a blanket coverage, entire farm, or it can be specific itemized coverage. And also we can have a coverage detectable limit. We can have the highest coverage or medium coverage or lowest coverage, depending upon how much premium you would like to pay. As I told you earlier, you're only paying 10%. 90% of the money is coming from the government. It's a subsidized insurance plan, okay? That means you're only paying 10% of the money. And also there are exclusion. We can remove certain things. I don't want this to be insured, that's fine, it's old, I don't care. And we can have specific items to be included. And also, we can also put some specific equipment with a premium price because it's a very high expensive instruments or something like that. You can also have premium price. Again, these are some of the top companies, 5 companies in the space, and there are some of the companies I saw. Royal and Sun Alliance established in 1710, so it's long, long ago. So there are so many companies you have to look into, and what are the price range they cover, and also what are the offerings they have. So you have to look into those statistics. So I know many of you may be thinking it's too much of thing for me. How can I do that? Okay. So now in this AI world, you go to AI and ask them, hey AI, can you tell me which is the cheapest insurance company? You can ask this question and it'll give you the answer. So you can interact with the AI and the AI will do all the searching for you and give you some kind of feedback. Or you can come to here to Harvest, and David can also help you out to give you some ideas. So what are the best options for you guys? So that's another option for you. And there are so many field officers. For example, Prairie View University, Texas A&M University has got many field officers, and they have their offices nearby. So you can go to their office. For example, I know an office in Rosenberg, USDA office. You can go there, knock on the door. Hey, I need some help with insurance. Can you help us? Somebody will help you out. Okay. If you don't have any knowledge, don't worry. Ask for help. Somebody is there to help you. So other important thing is impact to the farmers. The most important thing is, this is very important slide. So there is 2 things. One is farm insurance, other one is crop insurance. You need to understand the differences, okay? Crop insurance, you are insuring the crop, whatever thing you're putting in the field. That's what you're insuring, okay? You're not insuring the land or any other thing related to that. So, for example, if there is any subsidiary for farm insurance, generally there is no subsidiary from farm insurance, okay? There's nothing covered. It's all private insurance company does that. And for example, as crop loss, you don't cover under farm insurance, okay? Only crop insurance cover the crop loss. Also, if you look at the management in terms of, this is done by private companies, this is subsidized thing. Though many of them are private companies, is backed by the government. You can look at the property damage. This farm insurance covers the property damage, okay? Crop insurance does not cover the property damage. So you need to, technically speaking, if you own your land and you're doing some agriculture, you have to get both farm insurance and crop insurance. They're two different things. It's not the same, okay? If you just get the crop insurance, something damage happened to your farm, you don't get your money back. So you have to get both the type of insurance. Also, you can think about the livestock mortality. Livestock is covered by farm insurance, and also, in this case, crop insurance does not cover the livestock. And also, liability and coverages, farm insurance covers that, and crop insurance does not cover that. So we need to understand the difference between crop insurance and farm insurance. It's better to buy both of them if you think both of them you're going to take advantage of. So, as I told you earlier, crop insurance, these are the important aspects in terms of financial stability. If you lose your crop, you can get your money back. And in the case of machineries, if something damages happen to machinery, you can get your money back. Again, depreciation is another thing to keep in mind. You're insuring for 10 years, and in the 7th year you lose whatever money the machine costs, that's the money you're going to get back. You're not going to get the fresh tractor, okay? You're going to, depreciated money is what you're going to get back. And also aquaculture insurance, again, there are so many risk mitigation we talked about. Also talk about cattle insurance, again, same principle applies to cattle also. Herd, depending upon the breed and how much old it is, you can insure that particular animal. So this is the interesting aspect of the thing. I kept everything in the end to give you a case study, okay? So you can correlate your own experience or whatever thing you're doing to this, at least 4 case studies I put together here. So for example, the most important thing in the case is implementing the challenges faced by the farmers. And awareness is very, very important. You need to know there is an insurance company and you can insure your property, insure your land, insure your cow, insure your tractor, insure your cropland, okay? Very, very important. Awareness is very important. Other thing is solution. Farmers' education, like this event, is very, very important. That way you know there are companies who are doing this. And also, when you are taking the first step by insuring your property, insuring your land, you are avoiding risk. Okay, that's advantage. So, for example, you have a 1 acre land. Okay, you are growing some kind of a vegetable or some kind of a lettuce or some kind of a crop like that. What do you pay? This is a typical question, right? So this is called micro farm. 1 acre, 2 acre, up to 5 acres is called micro farm. And your cost is very highly subsidized. You're going to pay only $15 per year. For 1 year, for 1 acre, $15. The maximum could be $50. $15 to $50. That's almost like taking a coffee or going to a restaurant once, right? That's one time of investment, but you're protecting the property. And because the price is so low, because 90% is paid by the government, you're only paying 10%. It's subsidized, okay? And general liability is almost like $400 to $800 per year. And this is what happens. If, for example, if something happens to your farm, okay? And in the flood, you get your $45,000 back. That means you are supposed to make that $45,000 revenue. Since you lost because of flood, you get $45,000 big check back. As if you finished the crop and as if you got your everything sold, but unfortunately because of flood you cannot sell, but you'll get a check back from the government. It's an assured money. What happens if you don't have an insurance? You lose everything. Again, you go and borrow more. Again, you have to do the same thing. Again, flood happens. you're broken. After 2-3 times, you give up. So, okay, better to insure your stuff. And for example, this pest infestation, you get $10,000 back because you can recover certain aspect. Remaining money, the insurance company will pay. If there is market crash, if that particular product is not selling in the market or market does not buy your product, they can get your money back, the differences, okay? Let us take another example and see how it works. This is about organic farmer. If you're an organic farmer, as I told you earlier, the premium is slightly higher, $35 to $120, and also the money back you get is also higher, $72,000, because previously you saw $45,000, now we are going to get $75,000 back. Okay, so same thing, whatever thing I told in the earlier applies here. 90% is covered by the government, you're only paying 10%. And pest infestation, you get part of the money back. And also if there is a price drop, also you get some of the money back. So this is all beneficial for small scale organic farmers. Everything's okay? Okay, so if you are a cotton farmer, okay, in Texas, you see a lot of cotton producers, and the premium for the cotton producers is $12 to $25 per acre, okay, only $12 to $25 per acre, okay, 80% subsidized. And the money back, you can see, severe drought, there is no rain, you get $6,700 back. If it is a pest or some infestation, you get half the money back. And if it is market crash, you get certain amount of money back. So the last one is, if you are a cattle farmer, okay, if you're having cattle, assuming you have a 10-acre and you have so many beef cows in the farm. So typically in Texas, if you have an acre of land, if you put 2 cows in the land, no property tax. You know that, right? If you buy a land, 1 acre of land, and put 2 cows in the land, there is no property tax. Minimum 5 acres and above, but I'm talking about per acre 2 animals. Per acre? Yes. So per acre you have to have 2 cows. Yeah, 2 heads. So minimum you need to have 5 acres to get your 10 cows in 5 acres to get no tax for your property value. Okay, that is another benefit, because the government did that because they don't want to keep the land empty. They want to make it operational, right? So you get your money back. And you take an insurance, if a cow dies, you get the money back from the insurance company. Okay, these are all the benefits you have. And you can see here, if there is severe drought, I think last year there was a severe fire, and we lost several cows, several beef cows. And that's the reason the beef price went up. Now we are getting beef from Argentina. Because we don't have any more animals, because many of them died. Because of drought and too much of wildfire, we lost a lot of animals. They didn't have feed to feed the cows. That was severe drought. So if you have severe drought, it's almost like $450 to $800. And if it is a market crash, you get almost like $1,200 to $500. And also, if there is an accidental death, you can up to $2,500 we can get back. Okay, so a few more extra slides for you. I'll let you know. I'll let you go after this. This is very important. Big, beautiful bill. Okay, we should not talk politics here. We should talk about what we get as a farmer. Okay, there's a lot of benefits in the bill. So, for example, we have forestry, energy, horticulture, and we can see there are so many allocation of money in this area. And look at this one. For example, before and after, the premium price has decreased a lot. So the government is taking a lot of initiative to help the farmers to take the risk. Okay, because if the farmers don't go to the field, there is no food on the table. Because the farmers are afraid to go to the field because too much of rain, too much of flood, too much of risk. The farmers are not willing to take the risk. The government is willing to take the risk because they want food on the table. Okay, that's what they have increased the subsidy for insurance. That means you need to pay less for the insurance. Okay, these are the benefits you have this in the bill. You can see 80% and above is subsidized. I went to USDA in Washington, D.C., and there is a separate building, more than like 400, 500 people working for this USDA farm insurance program. So these are some additional slides. So as I told you earlier, document. You have a cell phone, take a picture. Every time you take a picture, and that is the evidence. Have it in you with you, and that way you can show your insurance agent. This is very, very important. Document everything, what you see, what you observe on your observation notebook of your farm book, and then show to the insurance agent. Anything in the farm can be protected, okay? You can protect yourself, okay? You can protect your house in the farm. You can protect the horses in the farm. You can protect the vehicles in the farm. All the crops in the farm. You can protect the cows in the farm. Hays can be protected. You can also protect the barn, tractors. Everything you see here can be protected, okay? Need not be, it can be entire thing or it can be specific thing, depending upon your choice, okay? Whatever thing you want to do. And you can see this is a advantage of specialized item value as disadvantages. So you can do a blanket protection or itemized protection. Itemized protection is better because you can get more money back. So these are some of the things you can think about if you are a corn grower, and this is the insured price project is 78 cents per pound is what you can insure. If the yield goes down, you can get the difference back. Okay, that is what is beneficial. If for climate change, too much heat, too much water or too less water, drought, the yield goes down, then you can get your money back. You're getting your yielding decreases, then differences, you can get the money back. So the details are all listed here. And also you can see this, they look at not only your farm, they look at the entire region, the nearby region. Near your farm, next farm, nearby farm, the insurance company will take a statistics. And based on that, they'll automatically send you a check. You got a loss this year, so we'll cover the loss. So with that, I'll stop here. So this is my address, my email address, and also my contact number. I work at University of Houston, and hope you found this presentation interesting. So what is the take-home message from this? Can anyone tell me? Protect your property, protect your farm, and reduce the risk. Okay? Thank you, everyone.
Thank you, Dr.